Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our publication. And joining me this morning on the 15th of November from Hastings Point, New South Wales is Tim Richards, who's the CEO of Geopacific Resources, ASX GPR. Tim, good morning.
Morning, Stuart. How are you?
You're a very fortunate person. You've just come back from Papua New Guinea, and because of the way the state of New South Wales works, you've been able to quarantine at home. Whereas if you come through Brisbane, you'd be quarantining in some godforsaken hotel in Brisbane.
I have done a number of hotel quarantines in Brisbane now, and I must admit, yes, far northern New South Wales is a lot more enjoyable.
Now, you're in a very interesting position right now with Geopacific Resources. We've got 1.6 million ounces of gold in JORC 2012 on Woodlark Island. Project is now fully funded with a funding package from Sprott, plus a big 140 million equity raise at 42 cents a share that was completed last year. So we're in the stage where we're building out the project right now. But last week, you had to announce some delays. Talk us through briefly what's happened on Woodlark Island just in the last few months.
Certainly. So look, the release last week flagged that due to weather and COVID, the construction activities on the island weren't advancing as quickly as we'd initially envisaged in the schedule. Primarily, the weather impacts affected the box cut for the CIL. So due to the material type we've got on Woodlark Island Coronus, there's quite a risk of cavity. So the geotechs, when they looked at the plant footings, made the call that we needed to box out to 5 metres and fill that back in with engineered fill to ensure the structural integrity of the plant. So the box cut was dug without any issue, but the higher than anticipated rainfall over that period meant that it was a bit challenging to get the engineered fill back in with the moisture and the compaction characteristics that the geotechs wanted. We are starting to see the weather improve now, and we're starting to make good progress, but nonetheless, there has been some delays attributable to that. And then the other impact, obviously, COVID. Although we've been very fortunate on the island that the cases of COVID have been minimal in the context of, I guess, the broader PNG and the rest of the world, it still has impacted us in terms of our ability to move expatriates in and out of Australia to Papua New Guinea, and also domestically moving our fly in, fly out staff within PNG. We've always had very tight protocols governing the movement of our fly in, fly out staff from Port Moresby to the island, with the primary aim of not introducing COVID to the island. But that's meant that often while the guys are doing their quarantine period in Port Moresby, if they test positive, they obviously can't come to the island. So our fly in, fly out staff are primarily our mid-level to senior level supervisors, and the absence of those guys certainly has an impact on your ability to undertake the works on the island. We are starting to adjust our protocols now to reflect the fact that we are seeing cases unrelated to the mine within the broader Woodlark community. So the mine's approach to COVID is transitioning, similar to the Australian economy's approach, transitioning from a zero COVID focus to
living with it, basically.
Living with COVID. We provide vaccinations on the island. We've got a full clinic. We, very well supported by the PNG Health Service in terms of having access to the Johnson & Johnson vaccines and AstraZeneca.
Compliments in part the Australian taxpayer has been sending a lot of vaccines up there.
Yeah, between the Australian government and the EU, PNG's issues with vaccinations aren't due to a lack of availability of vaccinations. Unfortunately, social media has not done PNG any favours in that regard. There's still a lot of half-truths and unfounded stories floating around the internet, but I guess that's not unique to PNG by any means. So we're pushing hard to try and get vaccinations rolled out on the island, but it's a challenge.
Sure. Okay. So basically, as soon as it stops raining on Woodlark, we get the box cut for the CIL completed in reasonably short order. COVID is what COVID is. You also talked in the release about some issues with the pricing of your wharf. Now, of course, Woodlark is about 500 kilometres by sea from Port Moresby, so all your equipment is going to have to be barged in and out. So this wharf is important. Talk to us about what happened there.
Certainly. So I think, again, the release probably paints a more negative picture than the reality on the island. We have an existing wharf facility at a location called Boy Boy, and that's primarily a roll-on, roll-off facility at the moment, which, for those people unfamiliar with PNG, the vast majority of the islands in PNG are supported through sort of landing barges that just pull up either on the beach or in a dedicated sort of roll-on, roll-off facility and unload. And that's what's supported the operations for many years. Now, during the feasibility study, the decision was taken to build a new facility. Now, the geotech drilling, when we did that earlier this year, came back and indicated that the ground conditions there were much worse than what we'd envisaged. So when we priced up the design to address those conditions, it was obviously a hell of a lot more expensive than what we budgeted for. Over the last month, while I've been out on the island, we've reviewed upgrading the existing facility, which has a number of benefits. Primarily, it can be built from shore. The water gets a lot deeper, so the proposed facility under the feasibility study was about 165 metres offshore, due to the sort of tidal flats that were located close by, whereas the Boy Boy wharf is only about 10 metres offshore. So it can be constructed from land. It's substantially simpler to build, and we're in the process of pricing that up now, and we think that's going to represent a substantial saving compared to the current sort of pricing we've got in our models. So we're very confident that going to the Boy Boy wharf solution will certainly pull a fair bit of money out of the current project budget.
Sure. Now, of course, then you've got to go and communicate with everyone, including your principal financiers in Canada, for example. But that's more a communications issue. You flagged in the release that the folks at your primary financiers have been quite supportive to date and continue to be supportive.
Certainly. Look, I mean, we talked to Sprott, at the very least on a weekly basis. We'd flagged the cost implications of the new wharf with them some time ago. We've communicated to them what our plan of attack is to try and address that, and now it's just a matter of getting the pricing back, based on the detailed design work that the engineers have done. Sprott does remain supportive, and as I said, it's a communication issue. We continue to talk to them, flag what we're doing to address it, and they're behind us. They're still committed with the 85 million debt. Obviously, we've drawn down the 15 million stream at this point in time, but we've still got plenty of equity, plenty of all of the debt sitting there, and the issues that we identified in the release last week, they reflect a delay, but given the current circumstances, we're not talking a massive delay here, and it's probably not unusual for a project of this nature to have some delays associated with it.
I mean, as I like to tell people, there are mines that come in on time and under budget every time, but they happen in a parallel universe to the one that we live in, basically.
Yeah, I mean, look, it's not something we wanted. It is a very simple project. It is still a very simple build. Unfortunately, just the weather and COVID have introduced a few variables that are very difficult to model when you're doing your baseline schedule. But we're working through them, and we're still very confident that the underlying project, remains what it is. The metrics are great, and they were done at 2,200 Aussie gold, let alone 2,600 where we sit today. And it's still a hell of an exploration story.
And this is the part that interests me. You've got RC rigs now being mobilised on the island, and part of that will be grade control for the existing 1.6 million ounces. But it's a fair bet there's more where that came from, and some of that might show up with this program, right?
Oh, look, certainly, and that's what we're targeting at the moment around Coolah Madao, and we've also drilled a few holes at Busai. The primary focus is Coolah Madao at the moment. As we'd flagged to the market previously, we're not interested in adding ounces at depth. We're interested in the surface extent of the mineralisation. So at the moment, we're doing sort of 100-metre holes adjacent to the existing Coolah Madao pit as the village relocation progresses and we get access to areas where previously we were unable to drill. So we're very confident that we'll see some additions to the resource. And for us, we really want to understand just how big this thing can be. I think there's going to be RC rigs and probably diamond rigs on the island for some years to come. And the focus will evolve over time from surface mineralisation, which impacts the first couple of years of production, through to deeper drilling, which ultimately grows the project in size and mine life over the longer term.
Right. Now, and of course, a lot of people are forgetting how straightforward this thing is on the flow sheet. Your ore is free milling. Processing through that CIL plant, which you'll have in place once the box cut gets done. And of course, once the box cut's in place, the rain can't hurt you at that point. The mine will, and the processing plant will just go ahead. But you've got a really straightforward flow sheet that even a layman like me can get their head around without too much trouble.
That's it. It's a fully oxidized deposit. You're not dealing with concentrate. You're producing doré, single stage crushing through the SAG mill, through the ball mill. There's a gravity circuit, and then there's your CIL tanks. Produce doré, throw it on a plane once a fortnight through to the Perth Mint. It really simple from a metallurgical perspective. You got recoveries in your low 90s. From a mining perspective, multiple open pits, plenty of stages, so you're not really exposed to too much geotech risk. You got multiple mining faces, shallow mineralisation. It's a really simple project.
Sure.
And look, the wharf's getting a bit of attention at the moment, but this misconception that operating on an island is a lot more challenging than operating on the mainland. My experiences in over 6 years in PNG, operating on an island is far superior to operating in the mainland. If you look
It's
at our
flat for a start. On Simberi, it's flat as a pancake, right?
Well, Simberi is flat, but more from a logistics perspective. For example, you try and bring a mill into WA, you've got to break it all the way down to get it through Perth. Then you've got to truck it on road trains for hundreds, if not thousands of kilometres to get it to your project.
Right.
For us, the mill leaves China, sails directly into Lae, transships in Lae, comes on a vessel straight to the island. We don't have to worry about roads. We don't have to worry about all of those challenges. HBS's mining fleet, for example, will all be pre-assembled in Brisbane. It'll drive onto the boat in Brisbane. That boat will clear customs in Port Moresby, and then it'll unload the gear fully assembled on site. And then the gear just drives to site. If you try and do that in Queensland and run a 775 up the highway, you're probably going to run into a few issues. But logistics on an island is just so much simpler, because you don't have to break things down for road transport. So, once we get through this little challenge with the wharf now, life becomes really simple.
Sure.
There are a lot of benefits to being able to get everything delivered by boat rather than having to deal with highways and bridges and overpasses.
Certainly. Now, I mentioned Simberi a second ago. I like to joke that you're the man who single-handedly saved St Barbara several years ago. You were the general manager at Simberi when they had a few teething problems, to say the least, at the start of the project. Over your tenure, it's fair to say most of those were sorted out, right?
We were able to get together a good team, and we had a good run from sort of 2014 through to 2019 with Bob Vassy running St Barbara and the right team on Simberi. We had a really good run. It's the similarities with the Woodlark project are uncanny in many respects in terms of the size of the process plant, the style of the mineralisation, and obviously the operating on an island environment. But I think what Simberi showed, and in a much lower gold price environment than where we sit now, is that if you have a simple project and you run it with a close eye on the costs, you can make great margins. And at the end of the day, that's what we're interested in as a management team, and I certainly know the shareholders have a similar view. You don't need to be a mega project to generate really good returns, and that's what our focus is at Woodlark. And I think if you look at what the team at K92 have done over the last few years in terms of really driving the share price on the back of exploration success, and that's the benefit that Woodlark certainly got over what I had in my time at Simberi. Simberi is a much more mature deposit in terms of the amount of exploration work that had been done. Woodlark, we've got a 1.6 million ounce resource, over 1 million ounces in the reserve, but we haven't touched the sides on the exploration. So we've got a great little project that'll be generating in excess of 100 million a year in free cash, but fundamentally it's still an exploration play.
Sure. And I mean, let me remind the viewers of the economics here. We're talking an NPV of 347 million Aussie on an 8% discount rate. And your all-in sustaining cost is a mere 12 or 1,300 Australian dollars an ounce, which is not to be sneezed at, right?
It is. And, you know, when you look at that 1,239 an ounce, that also takes into account the latter years of stockpile rehandle, where obviously margin's substantially lower than what it is in the earlier years.
Right.
And that's really where we see the benefits of the exploration strategy, is when the mine's producing at over 100,000 ounces a year in those early years, you're making phenomenal margins. And that's, you know, all of those metrics you just highlighted were at 2,200 Aussie gold.
Right.
We're, you know, significantly higher than that at this point in time. And really the only thing that the higher gold price does to our costs is it's a bit more royalty costs on top. The rest is pure margin. So for us, pushing hard on the exploration, getting this project into pouring gold, whether it's, you know, early 2023, nothing's changed. It's a delay, but fundamentally the project's just as good, if not better, this week than it was, you know, a fortnight ago before we put out the release.
Sure. Well, Tim Richards, keep up the good work. You've got your challenges, as anyone has in the development stage of a project as exciting as Woodlark. But keep up the good work, and here's to the next few months while we right the ship and get things moving forward.
Thanks, Stuart.